Thanks for taking time out for the launch of what we're calling our Arena series, which is being hosted by GalwayPlus. Our audience includes people who attended our Galway Live and Arena event last June, our Galway Ventures Investment Club, clients and strategic partners for anyone within Galway. And this is the first of a series of relevant topics and areas of interest that we're going to be presenting over the next 12 months. Today, we have a very good friend of ours and special investment expert, Nishant Machado, speaking to shifting generational trends that are creating investment opportunities, specifically as it relates to beverages, restaurants, and cannabis. Galway's Ventures Investment Club has supported Nishant on a couple of investments over the last couple of years. And he also presented at Galway Live and Arena last June with trends around the cannabis space. Brief background of Nishant is he spent 20 years doing private equity advisory work for Mackinac Partners. And over the last several years since I've known him, he's developed unique investment and operational platforms in the way of leisure and hospitality, food and beverages, and cannabis. As a quick reminder, I just want to let everybody know that this seminar in the Arena series is hosted by GalwayPlus, and there's no financial or monetary benefit to any Galway subsidiaries for this. Our goal is clearly to develop a community of common interests, to provide unique content, and open up conversations for mutual opportunities if people find this to be valuable. With that, I'm going to turn it over to you, Nishant. Take it away.
All right, John, appreciate it, and appreciate the opportunity to talk to everyone today. I think just to orient everyone with this webinar and how we've laid it out, I'll do a very brief kind of overview on my background, talk a little bit about our investment approach, talk about three of the industries that we focus on, which is food and beverage, beverage specifically, and then cannabis. Go over some of the do's and don'ts that we've learned along the way, the blueprints that we've put in place that we think help drive success, and then talk about some of the trends in these industries, where we see opportunities, and despite some of the challenges some of these industries face, and how we capitalize on nuances within these industries, and then end it with kind of a real-time example of how we layer our approach onto a specific opportunity and what we think of that opportunity. So with that, let's go through from a background perspective. John touched on a lot of this. So spent almost 20 years in private equity advisory. We were really the group that came in when all else was failing. Worked alongside some of the largest private equity sponsors in the country, be it the Blackstones, Apollos, Guggenheims, Fortresses of the world. And our role was really to come in to distressed or stressed businesses that sponsors had invested in. If the management teams were not performing, if the business wasn't performing, if there were macro challenges facing the business, our role was to come in either as a chief restructuring officer or the CEO to stabilize those businesses, revamp business plans and change those businesses around, and build those businesses back up, restructure the balance sheets, et cetera. I did that in every industry imaginable, everything from funeral stationery, which at that time I didn't know was an industry, to leisure hospitality, food and beverage, et cetera. And through that experience, really got to learn, the inner workings of private equity, the good, the bad, the ugly, what they do well, where there are weaknesses, why situations arise where they need someone like us to come in, and then develop a blueprint on how to avoid that if there came a day where I was investing our own capital, which is kind of where we are today. Along that path, we really focus on platforms, which you guys will hear me talk a lot about in this presentation. Some of the platforms we have today is a leisure hospitality platform. That came about, again, from finding kind of a nuanced opportunity within the timeshare industry during a very challenging time in timeshare, which was coming out of 2008, 2009. the great financial crisis. The industry was struggling, saw an opportunity within that industry. We knew the industry well, built a business, built a platform, later sold that business and that platform to Marriott. Following that, built a food and beverage platform, which we still own today, which I'll talk about in a lot more detail here shortly. Built a beverage platform. Again, industry is challenged right now. We all see the articles about alcohol companies struggling, distribution companies struggling. We found a crease within that industry where we think we can somewhat be a solution to that industry. So we'll go into a little bit more detail there, but we have the beverage platform. And then lastly, Sporos Capital, which is an emerging industry fund. The two areas that we focus on the most within Sporos, which we're not going to really touch on today, is nuclear energy and space exploration. So that's a little bit of the background. I think the one big takeaway is, while we are finance guys, we truly appreciate and understand the value of operational expertise. And that is a filter that everything goes through when we look at opportunities for us to invest in. We need to be able to have a level of confidence that we can actually create value from an operational standpoint to drive EBITDA growth and thereby multiple growth before we invest. So going into our investment approach, it really is centered around three core pillars, and we're very disciplined around these pillars. We have a very narrow industry focus. I mean, you talk to private equity sponsors, the one thing they boast about the most is having a massive funnel, and they see every deal that's out there, and then they process those deals down. I think that's an enormous waste of resources, time, effort, and expertise. We have kind of a reverse approach where we know the industries that we're focused on, we know the industries that we're very good at, and we kind of stick to our knitting. So for us, very narrow industry focus where we believe like we have a unique and differentiated edge because of our relationships, because of our experience, our expertise, and we know we have a blueprint to create value quickly. Emphasis being on quickly because we want to be able to get in and out of some of these investments, inside of 3 years. The second kind of core pillar is we focus on emerging and underserved markets. If you look at the core markets outlined below, when you look at beverage, there's segments within beverage that are emerging, which we'll touch on, THC beverages being one of them. You look at restaurants. Restaurants are underserved right now. Restaurants have been underserved since COVID. There are not a lot of sponsors that want to play in restaurants, and thereby it creates opportunities within the restaurant and food and beverage industry. And then cannabis, absolutely underserved and emerging. So we kind of benefit from both. And then the last kind of core pillar for us is we don't make one-off investments. We invest in businesses that we believe can be a platform that we can build on and use that to rationalize G&A, share best practices, and build scale quickly with a team that we have a lot of confidence in. And you'll hear me say this throughout this webinar. For us, a platform is people, systems, and process. If you have that and you have a good business strategy and a good business model, it's hard not to be successful. Going into the platforms themselves, so beverage, there are segments within beverage that we believe have a ton of potential right now and help solve a challenge in the industry, with the challenge being declining alcohol consumption across the country. The segment that we play in the most on beverage, and I'll talk about this as well, is THC hemp-derived beverages, and then tequilas and waters and non-alc, where we think there's room to grow. The restaurant platform, we entered the restaurant space in 2021 amidst an incredibly challenging environment coming out of COVID. Our focus was being able to acquire owner-operated businesses that could benefit from sophistication, technology, systems, process, bolt them onto the platform and drive value creation, which we've been successful doing. And then the last one is cannabis. Fascinating industry. It's taken the waves, the ups and downs in cannabis have been kind of unprecedented. A lot of people have made a lot of money. A lot of people have lost a lot of money. We've kind of studied those trends, looked at what's worked, what hasn't worked, and have a pretty unique approach on how we invest in that segment, given some of the uncertainty as it pertains to regulation, timing of regulation, banking, etc. So as we go through this, these are the three segments we'll focus on and talk about, what we think works, what we think doesn't work based on our experience. Starting with beverage, like we've kind of split this into kind of the do's and don'ts, missteps and keys to success, kind of just sharing our learnings along the way. I think one of the things that we hear a lot in beverage, especially with emerging beverages, oftentimes people mistake a product for a brand. A product is something that's functional, it serves a purpose. A brand is it's a household name. Everyone's goal is to build a brand. You can't do it without a product, but you got to start with making sure that product is king, making sure that product, the quality of that product can stand on its own and evolve it into a brand. Whereas most people try and build a brand and then back into the product, which is a huge mistake that we've seen happen time and time again. Another misstep that I think has costed a number of businesses heavily is when founders allow their personal preferences to influence or bleed into the brand and the marketing strategy. And those personal preferences could be flavor profile, where they may like something, but the majority of the audience might not, and not listening to the audience around you. Could be political, preferences or opinions, social preferences, opinions that bleed into the marketing strategy. It ends up becoming a polarizing brand. And while you might feel good about it, we're in the business of building businesses. We're not in the business of building platforms for people to, voice their personal feelings and opinions. So we try and stay away from that. I think it's risky. And again, very polarizing. Third thing on here is we hear this a lot. People build a brand and say, we'll figure it out. Everyone's, we'll figure out the route to market. We'll figure out how we get into retail. We'll figure out how we get shelf space. Shelf space is one of the most difficult things to get, hands down. One, because the beverage industry has been around for a while. A lot of it's relationship based. A lot of it is pay to play. If you don't have a secured route to market pre-launch, the time to realize success and the capital involved in realizing success multiplies significantly. We try and avoid that at all costs, and I'll touch on that in a little bit. Another misstep is kind of call it the silver bullet strategy, whereby brands think if they have a celebrity backing the brand, they can check the box and it's an automatic success. I think we've seen over time enough celebrity-backed brands that have not succeeded. Now, surely there are a few, and we know of many that have, but the overwhelming majority have not succeeded. And I think it's because entrepreneurs, operators believe that that's all they need to be successful. If a celebrity backs it, a celebrity endorses it, the sky is the limit. What you will see with that, you'll see episodic and periodic spikes. You won't see consistency, and buying businesses, building businesses, consistency is kind of the name of the game. Now, having a celebrity-backed brand in concert with and in combination with, strong business practices and a strong route to market and a strong marketing strategy, yeah, the sky is absolutely the limit. And the last thing from a misstep standpoint, I think people grossly underestimate the cost and the importance of having a strong ground game. Merchandising is everything. You need to be able to have feet in the street, people pounding the pavement, being in retailers, doing drive-alongs with distributors, building relationships at the store level, to make sure your product is well positioned, your pricing is right, inventory management is in place. It is hand-to-hand combat. It's a constant battle. The amount of resources, time, and expense associated with that is probably one of the biggest line items on your P&L, if you're going to do it the right way. So some of the missteps, some of the things that we've seen consistently, create challenges for brands. You flip to the right side of this slide, and you talk about some of the keys to success that we focus on and think are important. Is one, don't be too niche. Like I always kind of use the example, it's tequila versus gin. I know a lot more people that drink tequila that drink gin. You want to be able to build a product, build a brand that captures the largest TAM and the widest audience. I think that's critical. It minimizes risk, and it maximizes potential to be successful. Second one is know your target consumer, and make sure you speak directly to them. Don't be all things to all people. Have your target and then build around that. Use digital marketing to be highly focused and prescriptive on who you target and what that message is. Influencers are a massive component. As much as I think personally people are fed up with influencers. They wield a lot of influence, and using them the right way, the right influencers for the right product at the right time on the right medium is hugely valuable. A thing that is the balance that's important is sales versus margin. A lot of times, early stage businesses, it's all about sales at any cost. I think you need to balance that with margin, because if you don't, while you have sales, you're constantly in fundraising mode, and at some point, your sales won't keep up with valuation, and you're going to have down rounds, and you're going to have, material impact to investors. So for us, it's always managing sales, but with profitability and margin to make sure we are in sync and in lockstep with valuation. I think a lot of operators and entrepreneurs are very precious around equity. Early stage businesses, equity is your currency, and you need to use that currency wisely. Partnering with strategic partners and getting them aligned economically changes the game instantaneously. And then the next two is it sounds simple. It's very hard to build, but once you have it in place, it's almost hard to not be successful. And that's building really strong relationships with retailers and distributors. The only way to do that is to make their lives easier. For us, any product we put out there, our job is to make it as turnkey, as simple, as easy for distributors and retailers to pick it up, and then make sure, to the extent possible, economically they are aligned with us, so they prioritize us over everything else. Over the last 5 years, if there's one thing I think we've done very well that separates us from everyone else, is building those relationships. And I encourage anyone getting into the beverage segment, and if you don't have that, it's a really difficult road. And I've seen great brands disappear because you just run out of money, because you're just not going to get picked up by distributors or get that shelf space. Lastly, you can't emphasize enough being overcapitalized and maintaining flexibility in your cap table. Too many people get locked in what they can and cannot do, and end up working for a lender or working for an investor, as opposed to just building the business the right way. So a couple of things to keep your eye on vis-a-vis missteps, and then keys to success. If I had to pick out two in the right column, would be don't be too niche, and make sure you have the right relationships. Everything else you can always fix after the fact. If you don't have those two, you don't really have a clear path to success. Missteps and keys to success with restaurants. This is one where I think a lot of people believe they can invest in and build a restaurant, and restaurants are easy. Restaurants are probably one of the most difficult businesses to operate. Some of the areas of caution around restaurants are don't invest in one-off locations. Unless it's a pet project and it's a lifestyle play, it's very hard to monetize. It's very hard to scale. So depending on what your objective is, if it's to make money and get a return, one-off locations are near impossible to do that with. Understanding the operational lift, I would say it's like from the host all the way to checkout, getting that check and walking out the restaurant. There are about 100 different ways an experience can get ruined. And people only, they only opine on a bad experience, not on a good one. So the operational lift is massive, especially if you're trying to scale a business. Having the right systems and technology in place is critical. And then the one thing that people get enamored with, which is highly, detrimental to returns, is single owner or personality-based restaurants. And the example I've used here is like Gordon Ramsay. Like the whole world knows Gordon Ramsay, and Gordon's raised a ton of money for his restaurants, but Gordon's restaurants don't do that well because they are personality-based, and people expect to get Gordon Ramsay when they go to one of his restaurants, but they don't. And it's more novelty than it is irregularity. And for us, we can't invest in that. We can't invest in individuals. We invest in businesses. So, focusing on businesses that are scalable, that are not dependent on a single individual and their reputation and what they may or may not do is important. Prioritizing back office infrastructure and process is key. And then the last one that I've seen so many businesses fail and struggle as a result of this is new store openings. New store openings are, it doesn't matter how good you are, it doesn't matter how much diligence you do. New store openings are a jump ball. And you need to, I'll give you a great example, Del Frisco's. Del Frisco's is arguably one of the most notable, restaurant chains out there. They built Del Frisco's Grill, and Del Frisco's Grill, and I know how detailed and thorough they are on their site selection. But if you look at Del Frisco's Grill, 50-50, 50 are successful, 50 are not, despite the amount of diligence and effort they put into those. So I think your strategy and approach with new store openings needs to be very thoughtful to be successful. And then keys to success, it's culture is everything in restaurants. It's one of the few industries where you have multiple tiers of employees, everyone from, your dishwasher to your general managers, building the right culture, recognizing that your hourly employees are the ones that, are the engine that drive these organizations is essential. And it's something that lacks across the restaurant industry. Creating a culture that's based on SOPs and fiscal responsibility is something that the industry lacks. The industry is not an SOP centric industry at all. So bringing that discipline to restaurants drives efficiency and profitability pretty quickly. Managing incentives from managers all the way up to the C-suite is important. And then I think the one that is especially pertinent in this environment is staying nimble and agile to adapt to consumer shifts and consumer behaviors. I'll give you an example that's kind of happening right before our eyes right now. Wednesdays have become the new Fridays, in a sense. When 46% of consumers say they're more likely to go out on a Wednesday in 2025 than they are on a Thursday and maybe even a Friday, which is a shocking number. And just, 5-6 weeks into the year, we're seeing that play out. So as an operator and as, an investor, what do? You need to pivot, not so much to do anything on a Wednesday. You need to now start pivoting to protect your Fridays. Having the right team, having the right marketing strategy, being nimble to pivot quickly so you don't lose too much ground is critical, especially in this environment where consumer behavior is changing, it seems quarterly. Technology is something the industry has lacked for years, for decades. COVID definitely helped embracing technology, but the amount of efficiencies we've been able to drive by leveraging technology is incredible. We're talking 400 to 500 basis points from a margin perspective because of the technology that we're able to put into these restaurants. The last thing I'd say, and a lot of operators don't want to acknowledge this, you got to be obsessed with guest feedback and be able to, adjust to it very quickly. Guests are fickle. We all hate getting negative feedback, but being able to distill it and having the right process to distill it quickly and make adjustments, that's the best kind of gauge for how your business is going to do long term. And a lot of people turn a blind eye to that. So for us, keys to success, if I had to pick out 2 or 3 from on the restaurant side, it would really be culture within the organization is key, aligning incentives is key, and leaning on technology to drive margin improvement is mission critical, especially in light of inflation and some of the challenges we face today. Moving on to cannabis. Cannabis is an ever-evolving industry, and with a ton of twists and turns. I'll go through this one quickly. Some of the missteps are understand what you're investing in cannabis. I think a lot of times people think they have collateral in deals and they don't. While on paper it might say, in the event the company doesn't perform, you can foreclose and you have A, B, C, D as collateral. There's a big difference between having the collateral and actually being able to foreclose on the collateral. And kind of just to double click into that, most times the collateral you have is a license. That's where the value is. But oftentimes to foreclose or be able to take ownership of that license, you need to have the original applicant's kind of cooperation on that foreclosure or the transfer of the license. Now, if that original applicant is the operator and you're foreclosing on the business, the probability of you getting their cooperation is slim to none. So it's really important. People have lost a significant amount of money thinking they have collateral in something that they can actually take possession of. That is by far and away the most important thing. I think investing in small one-off opportunities without the infrastructure to scale is not something we would advise, because this industry changes rapidly and the risk associated with one-off is too great. Regulation is granular. It's on a jurisdiction basis. It's not on a state basis alone. It's not on a city basis. It's not on, certain towns. It's jurisdiction by jurisdiction that dictates regulation, and understanding that is critical. And then, failing to account for like unique constraints in building brands. And what we mean by that is, in the cannabis industry, because it's not federally legal, but it is state by state legalized. If you're building a brand, you don't have economies of scale. You have to set up an entire vertical. So you have to buy the emulsion, you have to set up separate manufacturing facilities, you have to set up everything in each state. You can't cross over state lines. Making sure you understand that, making sure you understand the costs and capex associated with that is essential. And then keys to success for us, it's I was a very good friend told me this as I was entering the cannabis industry. He said the cannabis industry is a lot of drug dealers that want to be businessmen and a lot of businessmen that want to be drug dealers. If you can find a handful of people that don't fall into one of those 2 buckets, the potential is significant. And for us, it's investing in proven teams that have a proven track record, have a disciplined approach, know how regulation works, know how to influence regulation in markets. That's mission critical. Focusing on limited license states. I'll get into that here in a minute. I'll give you an example on limited license states. We invested in a company that had licenses in the state of Maryland when Maryland was medical. Maryland is has a population of about 6 million people. The Maryland medical market was about 400 million in revenue. all precedent shows when a market goes from medical to rec, there's a 2 to 3x increase in revenue. So 400 million times 3, that's a $1.2 billion market. Maryland came out and said they're going to issue limited retail licenses. So only 100 licenses for the entire state of 6 million people. I know the potential revenue for that market now, once it goes from medical to rec, is 1.2 billion, which means on average $12 million a retail store, which drives significant EBITDA. So those are the markets that we focus on. Those are the markets I think people should focus on. The opposite end of the spectrum is something like Oklahoma, where it's not a limited license state, and everyone can get a license, and it's kind of a free for all, which obviously, demand and supply doesn't really work. I think investing in businesses where you can actually win a license versus buy a license, it just reduces your basis, reduces the risk. And then the last piece here is being an insider in this industry is important because it's still a very small industry, a small group of people. Being able to pick up the phone and call the CEOs of all the major MSOs helps drive deal flow, helps drive transaction flow, and is a differentiator for sure. So those are some of the do's and don'ts. We'll kind of run into, and I know we have 15 minutes, so I'll try and skip through some of this quickly. Some of the do's and don'ts and why we believe there's opportunity in these segments. So if you look at the beverage industry, alcohol has struggled significantly over the last couple of years. Alcohol consumption is down year in and year out. And you're seeing some of the major players in alcohol experience significant revenue pressure. So what does that result in? It results in these massive alcohol companies, they're looking for the next big thing. 5-6 years ago it was seltzer. They jumped on the seltzer bandwagon. That kind of helped bolster sales. That's kind of plateaued. You're seeing consumption go down. What's the next big thing? For us, we're trying to solve that problem for the industry with THC hemp-derived beverages, which I'll get to in a minute. But just looking at the charts on this table, on this slide, the one on the left, every single generation from the boomers to Gen Zs have consumed less alcohol in the last 30 days than the generation before it. That continues to go on. You're seeing the growth of non-alc. That is not slowing down. If anything, that's accelerating. If you look at the tables on the right, the one that surprised us the most, is the top left box that shows the daily consumption of cannabis for the first time since 1990 exceeds the daily consumption of alcohol with users. This is not some fly-by-night study. This is a Carnegie Mellon study that's been tracking consumption of cannabis versus alcohol since 1990. This is the first time that's flipped. And then you look at the table on the right, and it shows every category is down except for RTDs. So what does all of that mean? All of that means you have a massive industry that's got a significant amount of challenges, a lot of headwinds, which in our opinion and the way we think, that creates a significant opportunity. It's all about where is that opportunity and how do you play to capitalize on that opportunity. That kind of leads me into this next section, which is THC beverages. THC beverages are all the rage right now, whether you pick up a Bloomberg publication or the Wall Street Journal or a Forbes, you hear them talking about THC beverages. The THC beverage category is about a $240 million category in 23. It's expected to grow to about 4.1 billion by 2028. We are one of the leaders in the industry. We have a portfolio, a platform of brands that we've built that now exist and are on shelves in Total Wine, Specs, ABCs, Anheuser-Busch distribution networks have picked it up. Everyone's getting into the hemp beverage space. And the reason for that is, in the last 30 plus years, the alcohol industry has not seen a decline in revenue. And in the last 2, they have. They need to find a solve. This is the solve. And the fact that hemp-derived THC beverages are federally legal and you can sell them in traditional retail is a game changer. So for us, we initially started with a single investment in the hemp beverage space. Today, we have a platform and a portfolio of brands. And if you ask me what are our keys to success here, it's our relationships. We have extremely strong relationships with every major retailer and distributor. We have aligned economics. We make sure they do well when we do well. And they are truly, lockstep with us. They are our partners in driving our brands forward, but more importantly, driving the category forward. I truly believe, we're on the forefront and we're building this industry out every day. And it's going to be one of the largest segments of the beverage industry over the next 10 to 15 years. On the right side is, if we do want to play in alcohol, where do we play? And people tend to take a broad stroke view on things. It's like, oh, the alcohol industry is struggling, I'm going to not touch anything in alcohol. That's not really the case. You got to be focused on where you spend your time. For us, it's really tequila, non-alc, and flavored alc is where we believe there is opportunity. Over the last 5 years, that's where you've seen growth despite everything else declining. So we believe there are opportunities. We believe with our relationships, if you have the right route to market, you can be very successful in alcohol within certain sectors and segments and spirits in the alcohol space. Quickly, this is our beverage portfolio. Like I touched on, non-alc is the THC beverages. Alcohol is more on the tequila and flavored RTD side. And then we have a play in non-alc, more focus on water, think liquid death. We're in the process of closing that deal and hopefully have that done in the next quarter. Restaurant, I'll kind of skim through some of this. You guys will get the deck and can go through it. But the gist of it is, despite cyclicality, restaurants have continued to perform well compared to traditional retail. You have seen a decline in smaller restaurant chains, even though they make up the greatest percentage of restaurants. Those have declined over the years, which just again highlights scale is important, but also highlights the fact that the smaller players is where there is opportunity. It's the largest segment of the industry. So if you're going to be acquisitive, you're going to build a platform and bolt on, that's where you can find, undervalued opportunities. 2024 was a mixed bag. The one thing to take away from this slide is that I think is incredibly important and a bellwether for restaurants is private equity's got a herd mentality. When a subset of private equity move away from a segment, everyone runs away from the segment. That's what restaurants faced in 24. M&A declined significantly, but then toward the end of the year, you saw mega transaction. You saw Blackstone acquiring Jersey Mike's for, $8 billion. You saw Blackstone acquire Tropical Cafe for $2 billion. We fully expect there to be a rotation back into restaurants in the middle market in 25. And, all initial indications are that is going to happen. So for us, with our restaurant portfolio, we think we timed it well, where 25, we should be able to either build on that portfolio or exit that position completely. This is a little bit about our restaurant portfolio. Given time, I'm going to skip over this. The one thing to pull away from this slide is the cannabis industry is hugely undervalued today. Kind of direct everyone's eyes to the graph or the table on the right. If you look at cannabis growth, the cannabis industry is growing in about 6% a year, and in EBITDA multiples are about revenue multiples about 1.3x. You look at any other industry, whether it's alcohol, CPG, tobacco, the growth rates are significantly lower and the multiples are significantly higher. What does that tell us? That tells us we know regulation's coming. It's a matter of time. If you have the right business, the right platform that cash flows, is stable, the arbitrage in valuation is significant over the next 3-5 years, that's where we want to play. We know we're going to get that multiple expansion with regulation, and if we have the right business, the right platform, the right scale, we're going to be a leader in the space. Our thesis, I've touched on this, it's really focusing on limited license states that go from medical to rec, focusing on platforms, teams, businesses that we can bolt onto, that have a good track record that we can, fully capitalize on. An example that we have here at the bottom of the page, and I think a lot of Galway team members invested in this with us. We invested in a company called Story Cannabis, pre-revenue. We invested, that was about 3 years ago. Fast forward to 2024, the company did about 125 million in revenue and 45 million in EBITDA. It's a home run. It's trending and tracking to do about $65 million in EBITDA this year. And we believe that's going to be a 5 to 6x MOIC when it's all said and done. So lastly, with a couple of minutes left here, let's kind of take all of what we talked about, our approach, our discipline, our strategy, the filters, et cetera, and tie it to a real life opportunity that we're working on today. We know the alcohol industry is struggling. We know that there are, challenges. For us, it's where can we play and be successful. We believe tequila, flavored tequila, is a segment of the industry that can do very well. We've invested in a company called Maniball. So think Fireball, think Screwball. It is a tequila company. It's a peanut butter flavored tequila. We have significant strength in route to market. Owner-operated business that we've acquired, we can professionalize, we can build, we can scale. We believe this has tremendous potential over the next few years. We know that some of the major players are looking to acquire. Our goal, our strategy with an investment like this is professionalize the business, have proof of concept, bring the right distributors on, partner with the right retailers, get the right shelf space, all of which is pre-baked for us because of our relationships. Show the potential off a brand like this, which I think has the potential to be, as big, if not larger than Fireball. I think it's a once in a lifetime opportunity to play in the space. And then exit to, a Diageo, a Constellation, a much larger brand that can take this a lot further than we can with our resources. So, to sum all of this up, I think these are industries that we wanted to touch on. We didn't want to go into nuclear and space and all the other things that we're involved in because those are somewhat far-fetched, but touch on industries that all of you see opportunities in on a daily basis, you're well aware of. If you do, we're always available as partners and friends to Galway, always available. Reach out to us. These industries we know extremely well. We have deep-rooted relationships. We have the experience. We have the expertise. If we can be helpful, reach out. If you want a read on a situation, we're happy to look at it. If you guys want to participate with us on investments, we're happy to share. Our goal here is to basically share best practices, do's and don'ts, what we think work, what we think doesn't work, to make sure you guys all make, educated decisions. So with that, I think I'm right on time here. I will hand it back over to Lori.
Thanks, Nishant. That was tremendously helpful. Great information. Obviously, a lot to think about in the space that's highly nuanced and complex, and appreciate you boiling it down for us so clearly. And everyone, thank you for your participation. We will send out the recording and this deck following this. If you have any follow-up questions, please don't hesitate to reach out to us or to Nishant directly. And then just to follow up on, reiterate what John mentioned at the opening, this is the first in what will become a series of webinars under the GalwayPlus Arena series that launched in Cabo last year. intending to bring some unique content and create forums for creating opportunities for our community. So if you have anything that's of specific interest, let us know. Otherwise, we will be in touch next time. Appreciate it.
Thank you.